Hey team, hope you're well. Today we're going to be going through a video explaining my perspective as a mortgage broker in terms of how credit score actually works here in New Zealand. There's a bit of misconception in terms of like how it works in terms of if you can get a loan depending on what your score is itself, but I'm kind of going to go into depth about how I see it as a broker personally and what are like the things you need to think about if you're thinking of applying for buying a property or refinancing or trying to get a better deal or something along the lines of something mortgage related. So we're going to go into depth of it now in terms of everything that I think is worth going over. So I prepared kind of just like a list of things that I want to go through specifically from my personal experience. Like I mentioned, I probably have submitted maybe 100 applications over the last 6 months, and a lot of those applications has been pretty simple or not too concerning in terms of like a potential credit score, but a lot of those deals, maybe like 20, 30 of them might have been a bit more touch and go on the credit side of things, did have a dictation on whether an application I submitted got approved or not. So I'm going to take through sort of the things that I look for personally now after doing like, these deals recently as well. It's not like I've been doing these deals years ago. I've been doing them actively and recurringly right now. So I'm going to take you through all these things. So before I do as well, one thing to note too is just because you have good credit doesn't necessarily mean you're always going to get approved. The two key fundamentals in my experience from being in the industry and like the absolute must fundamentals if you want a mortgage in New Zealand is you need to prove that you have the income to support the debt that you're taking on, and you also have the equity where there's a margin of safety there that in the event that you're not cooperative with the repayments, the bank can repossess that collateral or security. So these are the two key ones. But just because you have these two fundamentals doesn't necessarily mean they'll approve the deal, because sometimes there can be a history of like say bad credit, and that's what we're going to go into today in the specifics of what you need to know. So I like to think that there's like three key things. These two are probably generally more important, but credit does have some sort of dictation if you can get approved or not for what you're trying to achieve. Now, in terms of credit itself, one thing is that it's a subjective measurement in my experience. Sometimes it is a bit more black and white, and we'll go into examples of like where it is a bit more black and white in terms of like if you're going to be approved or not. But say like the score itself, in my experience, doesn't necessarily determine if you're going to get approved or not. There's not like say one fixated number, whereas if your credit score is like 400, you're going to be declined or not, right? Because in say, the lending world, right, where an assessor is viewing a application of someone's credit, they're not going to look at the thing and just like turn it away in some sort of report or data of like the client's history, right? And each bank is a little bit different. So for example, you have main banks, and these will be like say your ANZs, your Westpacs, your ASBs, etc. And you also have your specialist lenders where they're like say have maybe higher interest rates, higher fees, etc. And they might be a little bit more lenient in terms of the credit and the history there. But each case is a little bit case by case. Each lender might have their specific policy of like what they perceive, but in some circumstances they may even make exemptions depending on the scenario. So that's one important thing to understand. The next thing I got here as well is there's a bit of a global difference, right? Like in America, I know they have like a lot of emphasis on credit. I'm not like a specialist overseas, but one thing to note too, like I mentioned and kind of what I've said earlier in this video, it's not so like black and white maybe as other countries and what I've experienced. So I think one important thing too as well is say if you're wanting to know like if your credit score is high or low, I think it's actually going to come up in these later things that we're going to go through is that you can get a specialist, someone like myself, to actually review a credit report for you. But here there are actually going to be some other common questions here. I might actually remove all of this fill here anyway. But yeah, like I said, the score itself not so important. Things to look at the report. So now we're actually going to go through a specific example of a report and things that I actually like to identify. So I'm just going to quickly go through that now. So in my experience, probably the most common site that's used to report someone's credit is using this platform called Centrix. Now, I don't really have like any affiliation or connection with Centrix directly. I just know more often than not, the assessors and people at the bank, when they're assessing an application, will use this type of software. So if we scroll down some things, actually here, if I don't scroll down, actually, important here on the left-hand side, you obviously have the score that's represented over here. I guess it's out of 1,000. But like I said earlier, there's not necessarily, I don't know how it's calculated or so much influence on the score number necessarily itself. Probably the more key things are these. So for example, if we look at like judgments, these might be more critical things that have happened, and that will be a bit of a hindrance if there is some sort of judgment, especially if that judgment is in excess of, say, $1,000 or more. Insolvency notices, there's been insolvency that might be a hindrance in that specific bank's or lender's criteria. Same with credit defaults or arrears, like all of these things. These are the specific things that probably will dictate whether a client is going to be approved or not. And if there are mitigants for these specific things, that might give, an assessor or the specific bank a little bit more ease in these scenarios, right? So a lot of times, in my experience as well, if there's, say, like an arrears or an amount owing of more than $1,000, especially if it's to like another lender where they've specifically been behind on, say, a mortgage itself already, that is probably one of the worst possible things that, that could be submitted in a credit check or report, right? Because if you're seeking to get a better solution where you're already behind on your existing mortgage, how can another bank, potentially be prepared and justify taking this on if you're already behind, and that's going to be an inconvenience to him. So from my perspective, that's sort of the thing that I look at. Maybe, I might not be a specialist in terms of like credit and assessing that, right? As a broker, I'm thinking of ways that I can get the best solution for my clients and seeing if something can be done. But the reality is, fundamentally, I think that's the biggest thing that I look for is like, say, if there's $1,000 more that has been owing for like, say, a longer duration and has not been paid off, say, since like maybe a 3 to 6 month period is generally what banks look at. Like I have a client that I've been working with recently where they've cleared their arrears and debts and they actually don't have anything owing, but they've only done it recently. So there might be, say, a 3 to 6 month window where that bank or lender is looking to see that has been fully cleared off. And until that date, they won't take it on because they want to see that consistency in history that it has been cleared. So one like probably biggest deterrent outside the score is just the amount owing itself and what it was owing for. Say if you've missed like a parking ticket, you didn't know about it, that might be a way of being mitigated potentially, rather than say like a mortgage. Or maybe if you've missed like a 2 degrees or a spark bill, or if you've missed a Sky TV that wasn't known about and you're in dispute for it, maybe there's some things that could be done. It might be a little bit more case by case if there's other things to suggest that an application is really strong. But like I said earlier in the video, it's very subjective as to like what is going to get approved or not based on the credit, right? One of these things too, if I actually go back to my Excel sheet, this is actually one thing I wanted to talk about is like, how can you actually get this report that the banks would currently look at, right? Like I know there's another software I think called Clear Score or Clear Simple. It might have changed potentially, but again, most of the time, banks are looking at the Centrix report. That's the one that they most commonly use in my experience. So a way of getting the report is something I can do is I can actually download it. There's probably a way of getting it through Centrix directly, but if I have personal details from my clients, I can actually order one and actually see it before I submit an application to the bank. One thing to note too is some people say this to me, and I actually didn't necessarily know before I got into the industry of like what happens when you submit an application to the bank in terms of it being good or bad for your credit score, right? So one thing that I've noticed is if you submit an application to a bank, it will show up in your file activity. Like you will get like some sort of ping that shows up in your credit score, but I don't think it has any influence on the score itself. And it can be probably perceived in like two different ways if an application is being made and it's on your file activity, right? Like say, for example, if I'm scoping and trying to get like the best outcome for my client, I might submit an application to multiple banks, right? Like I had one recently, I think I sent it to say Westpac, ASB, and maybe TSB, right? Trying to get the best solution for this client. This is just an example, by the way. But let's say I submitted it to these banks. All of them are probably going to notice, or at least the banks that I submitted it last to, say I submitted it to TSB last, TSB will notice that I've sent it to Westpac and ASB prior. And that might be, say, like a red flag to them potentially because they notice that it's been sent to multiple banks already. But I think the file activity itself doesn't have any disruption on the credit score, right? If you think of the perspective of an assessor, they're trying to think of the worst case scenario, but also bring business that's going to be really good to that specific bank as well. So at the end of the day, like I've kind of mentioned and gone over before, it's more subjective as to like if a deal is going to get approved or not. There has to be really strong mitigants. There needs to be like, a clear way that this makes sense to another bank. But if there's like a, judgment or default or arrears in excess of like $1,000, it's going to be pretty tricky and you need to have consistent history where that's, being cleared. And maybe more often than not, maybe a specialist lender will be more prepared to take it on than say a main bank. But that's sort of why it's worth like maybe reviewing it with a mortgage broker and going more into detail. So that's my perspective, guys, at least my experience being in the industry for 2.5 years of like what to note. and just from me doing, a bit of volume over the last 6 months of doing lots of applications. So hopefully that's helpful. If you enjoyed this video, I'll leave some other videos of mine on the screen that you can check out, and hopefully the reviews. Cheers, guys.